In Wednesday's trading session, spot gold broke the $1,800 mark to print fresh 9-year highs. We have not seen these levels effectively since the September of 2011, and this broke a very crucial resistance level at the $1,800 mark. Gold futures rose above $1,800 in the past few trading sessions, since gold futures trades at a slight premium to spot gold due to some specificities in the quality and the delivery of the gold. But $1,800 for spot gold was indeed a very crucial resistance level. If we look at the historic chart, $1,800 was a level we struggled to get past many times in late 2011 and early 2012, but it seems as though today we've made a solid, clean break through it. We closed above it, and this is a very, very bullish sign for gold. At the moment, I think what's going to happen in the next few days is that we might go even higher, although we might see a pullback, since I think this rally is a little bit overextended. But nonetheless, at this point, I think the only major resistance level left is the previous all-time high, and if we break above that, 2,000 is the next level we target. The reason why gold has continued to climb in the past few days and weeks is because the central banks are once again warming up their money printers, and the Fed's balance sheet continues to grow. And at this point, the Fed's balance sheet grown to over 7 trillion from just 4 trillion back in March. And I say just 4 trillion because, well, now we're at 7 trillion, nearly doubled. It's the balance sheet, and in part due to the zero interest rates, that's been sparking most of the growth. A lot of people have been saying that the economy, it's certainly not a V-shaped recovery, so why does the NASDAQ index look like this? And the reason for this is simply because, well, no one wants to hold on to cash, and so they're trying to find whatever avenues possible to store their money. More skeptical investors probably look to this and are not very certain, and so they look towards investments such as gold. And you can see in recent times, Bitcoin has rallied similarly, although not as much, towards massive highs compared to where we were in March. Simply, the Fed action has caused a massive wave of buying, and that pretty much pushed just about all assets higher. Furthermore, we can see that bond yields at the moment are pretty crap. At 0.2%, you're not really going to beat inflation in the long run. And so even if you're stashing your money into treasury notes right now, you know, it doesn't really make too much sense to, given that you're not going to hold on to the real value of your money. People are looking towards alternative investments, and gold seems to be it. At the moment, I think there is not exactly much reason to short gold. After we broke above the crucial $1,800 mark, there really does not seem to be much reason to be shorting gold at the moment. And I say this as somebody who was pretty much shorting gold. In my past few videos, I was talking about how I was short the Russell 2K. In my videos, well, in reality, I was pretty much short something similar to the Russell 2K. I was shorting junior gold miners. Pretty much it behaves similar to the Russell 2K in the grand scheme of things, and I think this is more of a leverage position. I thought gold was really going to not go past the $1,800 mark on a purely technical basis. But I guess this is one of those times where, you know, you can't really look at the technicals and say, okay, well, this is what's going to happen. Sometimes, you know, reality defies technicals, and when you have big money buying into, you know, a massive market, no one's going to care about whatever lines you want to plot down on a chart. And so I was short this at around 49 back on Friday. I didn't think it would really soar this much, but you know, you get proven wrong every once in a while, and it's a sobering moment. In fact, as much as I hate to admit it, I got burned incredibly hard. Not so hard to the point where I had to call a hotline and ask them to talk me out of it, but definitely pretty hard to the point where I have to, you know, take a step back on life, ask myself where it is I want to go, and reconsider a bit of my future. But no, nothing too serious. It's, if anything, it hurts the self-esteem more than it hurts anything else. But yeah, I got burned really hard shorting this thing. I was holding $56 puts, actually, that expire in about 2 months, and so, you know, I'm down big. That was pretty much most of my portfolio, actually. I was such a stupid move looking back at it, but I was looking at this rally, and I was thinking, no way we don't see a pullback soon in gold. And if we see a pullback in gold, gold miners are going to pull back, but absolutely that's not what we've been seeing. This was actually also a previous resistance level for junior gold, but again, we breezed right past through it. No resistance whatsoever. We simply gapped above it, and yeah, I closed my positions, not shorting junior gold anymore, not shorting gold at all. At the moment, I'm just writing cash covered puts on the inverse NASDAQ index, because I think we are in a little bit of a tech bubble at the moment. But again, a lot of big money is buying into the markets at the moment. No one wants to hold on to the US dollar. US dollar is getting completely hammered in the past few days, weeks, and months. So it's certainly possible we see NASDAQ go higher. Junior gold could continue to go higher as well. Gold, again, not exactly any short-term resistance levels, so I believe this will hit 1900 sometime in the future. 1917 was the previous high. I think we will test that level absolutely. And if we break above that level, I think 2000 is what's next in focus. I do believe that gold at the moment does appear to be a little too overbought, and so we might see a dip going into the future, but absolutely I am not shorting gold at the moment. I think dips are buying opportunities, and in fact I might even look to buy into this market if we see any substantial dip, because I do like to buy bargains, which actually really doesn't work too well for stocks. Stocks is more of a buy high, sell higher type of deal. Anyways, with all that being said, I thank you very much for listening to my analysis on gold and gold stocks, and I wish you best of luck in your trading. Take care.